Now that we've covered the U.S. and some of the high frequency data, let's dig in a little bit more into Asia. But before we talk about that, I think it's important to, as we covered in the first part, was the price of grains and what does that mean for food and what are we seeing overall. We talked about the rise of extreme poverty, how that's really shifted up, and this is a piece of why that's becoming such a problem. Because when we look at the U.S.-China Phase 1 tracker for agriculture products, clearly we're going to miss the mark, but we're going to get closer due to the just surge of buying that we've seen due to all of the issues that China has experienced, from flooding to armyworms to droughts in different locations. So here, the actual exports to China continue to go up. December will be a new high, and sales are still 24% below needed pace. So again, the trade deal is never going to get hit. It started off really slow and then obviously accelerated through August, as we talked about in our Three Gorge Dam episodes when we were talking about the flooding and droughts, depending on where you were located, and how they just had terrible yield. And we've continued to see just prices increase across the board. This is, French corn is at 6-year highs. You have Russian products at 9-year highs. You have U.S. stuff at new highs for the year. These are things that are going to put additional pressure on countries that have to go out and purchase all of these products, because China and it continues to buy, as we had weaker output from some key areas given drought, and we had damage in the U.S. from a freak storm that damaged corn and other types of crops, again limiting the amount of supply that we have. Now, that not only do we have a supply problem, but we also have a big increase in pricing due to a weak dollar. So when we look at this is looking at soybean futures, wheat futures, corn futures, and you can see the explosion to the upside coming. We've been talking about inflation really starting to pick up in the grain side. In March, we got it faded a little bit, but then as we got into January and into the end of July, beginning of August, that was when we really had a shift with the storms, with the droughts, and that was when things started to go parabolic. It's also at the same time when the dollar really accelerated to the downside. So you had a supply problem, demand increasing, supply shortfall, and a weak dollar, which again has pushed us into these parabolic movements. And this is going to put additional pressure on people who are going to be food insecure, stretching what their salaries can actually afford, as inherent costs continue to get pushed through. Because you might say, well, some of these countries have subsidies, some of these countries kind of try to cap what they charge the consumer and their constituents. The problem is these countries are also struggling with trying to stimulate the economy, not having enough stimulus because fears of inflation, limited amount of debt that they can issue. Again, that's why this pain is going to be felt across the board and reverberate. And as we get people who maybe can't afford pork or chicken or some other types of proteins, they will go down the protein chain, which is, falls in the soybean category, which is why we continue to see soybeans continuing to shift to an all-time high, not an all-time high, but, recent highs. And when we look at beans, like this is obviously snapped this earlier in the day, it's gotten above 1,300. So you see some of the issues. But when you have some of these issues here, well, what about economic activity? And that's when we start talking about, South Korea. So the high frequency data has continued to get worse, as we've seen cases increasing, which government stringency has increased with it. And again, the government stringency is going, it's now back above 60. We have public transport coming lower again, retail, recreation going down, power demand has been fairly stable, but, these are issues that we continue to see as stimulus gets pushed through. But even as COVID cases increase, economic activity declines, the Kospi is at, going to new all-time highs, and Japan's at a 30, the Nikkei is at a 30-year high, and these continue to move higher. So again, this bifurcation between economic activity and what the actual market is telling us. So, but the one thing that is nice as we go through, some of the activity indicators, we see that we got back to these lows that we saw in August, but we think that the worst is behind us. And the problem is with the holidays and the increase in cases, we don't think we're going to get a big snapback. And again, it comes back to what we're seeing in emerging, in not so much emerging markets, but in advanced economies, where we're going to get this bounce, but it's going to be much slower, because you're seeing January, obviously January, February is a slower month to begin with, slower months to begin with. But that is going to keep people concerned, because again, we're not going from March to April or from winter to spring. We're going from, fall to winter, and that's going to keep things a little capped. And again, the recovery now, while the bottom is in, we're not going to get back to negative 10%, down 10%. We're going to get to down 13 to 17%, and we're going to start to level off, which again is going to show the slowdown in just inherent demand internally, which when we come back to, and which we'll talk about, the issues behind exports and imports. Exports are that supply-driven recovery. Imports are showing that demand side just isn't there, which again remains concerning. And now when we shift to China, we have to look at, okay, well, what about Ant Group? Because we keep talking about Alibaba. We talked about how the issues were going to get more aggressive, especially as we looked at the dual circulation system. What does it mean for supply side adjustments and demand side adjustments? The CCP is saying that demand side is due to income inequality. And where are we seeing the most inequality? Well, let's look at their billionaire. So this is the breakdown of, the anatomy of the Jack Ma's giant, shift. And when we look at asset management, 173 billion in prop money market funds in China's largest, lending 290 billion in consumer loans to be issued by 2021. Again, this is something that we're seeing some of those shifts in. Online payments, 17 trillion access via Alipay in the months through June. Insurance, 107 million people joined the mutual aid and healthcare plan. This is being, I don't want to say attacked, but it's being addressed. There is an intense scrutiny that's being pushed into some of these tech giants within China, which is only going to increase scrutiny. So China last week intensified its scrutiny of the twin pillars of Ma's internet domain, when it also kicked off an investigation in alleged monopolistic practices at Ant affiliate Alibaba Group Holdings. The e-commerce firm, the firm's U.S. listed stocks obviously fell. This is where we continue to see some of these issues. Now, not only are we seeing a pressure to address income inequality, ways to stimulate domestic, but also Jack Ma had negative things to say about, the President Xi and his running of the country and the economy, and given the fact that 80% of the things that the is in the CCP doctrine based on congressional approvals and what's written into law, 80% of it is said by Xi. So to come after him, you're coming after the CCP is kind of the way people are thinking about it, which is why you're seeing such an open attack. And obviously the owners of the Apple magazine in Hong Kong under arrest, is under arrest. There is a crackdown across the board, because communism goes in one of two ways. One is things get worse, and you either say we need to increase the opening of the economy, we need to stimulate, we need to let the free market decide. Or the other is we didn't control enough. We let things get out of hand. We let people run wild. And now the central planning, the state has to step in to ratchet down control. And obviously that's the route they're going. And to argument's sake, so is the U.S. But, when we look at, okay, well, what are bond defaults? So let's look at corporate bond defaults. And we're now at 1.1. We continue to see this acceleration. And the number of bond defaults in China is large in 2020, and it's not as large as previous, but the sheer size is a record. So we're getting a record amount, a dollar amount of the bond defaults in China. But the more concerning side, and we'll talk about this more next week, is a lot of them are SOEs, and those are state-owned enterprises. So we're getting a huge increase in state-owned enterprise defaults, which again is becoming the bigger concern because a lot of banks were incentivized to lend to SOEs with limited guidance, with forgiveness of principal, with forgiveness of collateral. So now as you default, there's very little collateral to offset those defaults, which is why bad debt expense continues to go up, which is why these become a bigger issue when we look at the cost to China's economy to support not only the bond defaults, and a lot of them at the SOEs then fall to the PBOC or the provincial government, which then has to back them with tax revenue. And by backing them with tax revenue, you mitigate the amount you can stimulate through new loans, and then you have to go to the PBOC to get support, and you sell that bad debt to them, trying to get some money. And you can see how quickly the things get intertwined, and they try to, you lose where some of the risk sits. But not only are these issues, but they continue to go after some of the billionaires and their underlying companies to essentially take back some of the state control, which is the overarching problem. And as we continue to talk about supply versus demand recovery, we have to look at other countries within Japan, within Asia. So let's look at Japan. So Japan retail sales. So the estimate month over month was supposed to be down 0.8%. It was down 2%. The estimate year over year was going to be up 1.8%. It was only up 0.7%. This is a perfect example. The fourth largest country in the world, economy in the world, significant amount of stimulus, significant amount of BOJ growth, and they just can't get the consumer to buy. The demand internally remains weak, and this is not just a Japanese issue. This is across Asia. This is in China. This is in South Korea. This is in the US. This is in Europe. Europe had a little bit of a surprise to the upside, but is that going to continue? Short answer is no. These are things that we continue to look at to see, can we see an increase in exports from China without taking more market share at a high cost to the CCP and the PBOC and the local provinces as we see that demand slowing? India is the same thing, as we've been talking about constantly. Japanese industrial production. So industrial production estimate for month over month was supposed to be a growth of 1.1%. It was 0. Industrial production year over year estimate was supposed to be down 2.3%. It was down 3.4%. So you can see we're heading in the wrong direction for industrial production. Yeah. And this comes to when you look at exports, and this is what we've outlined countless times, where you can get a big surge in exports, but if you don't have the follow through on exports, then you continue to increase your inventory at the port. And as the inventory increases at the port, you have to reduce your industrial production because you have to clear what is sitting at the port to get it into market, to get it into the world, to free up the supply chain. And when you don't have demand at the levels that were expected, but so you can get these large surges in exports, but that's why we keep talking about imports. We need to look at imports because that is indicative of what is local demand look like, what our semi-finished and raw material imports look like, because those get turned into final products that go out for export. And that's where we're seeing this disconnect, which is why people like to point to, oh, this is really good. It's like, well, that is good, but what is the underlying component? Is there running room there? Can we see a follow through because the other data is saying no? And that's where we're starting to see that reverberate back through the system. Malaysian trade data, something similar. So when we look at the estimated export, it was supposed to be 3.1%. It came in at 4.3%. That's really good. We saw a nice increase in exports, but let's look at imports. So now imports were expected to be down 6.2%. They were down 9%. These are the issues that we continue to see is we get these one-off increase in exports, but the import data, which continues to be down, is trending lower, continues to be the problem that keeps us essentially locked in this. Well, how stable is this demand recovery? Because after you fill the inventory and you're restocking what is stuck at the coast, what can't get into the water, And now that's where your imports start to drop. And at the same time, you have a domestic demand problem. So not only is your local consumer struggling, but your export partners are still struggling, which is why when we look at the advanced economies versus the emerging markets, without advanced economies recovering quickly, and that's why, like, if you look at the high frequency data charts, the emerging markets have outpaced the advanced economies. That can only last for so long, because if the advanced economies aren't buying, these guys aren't selling, which means that their economies are going to slow because they just don't have the capacity to try to withstand the pain overall. The Vietnamese economic data overall, we've seen a little bit of an increase, and this is one of the bright spots. So as I've talked about, Vietnam remains a very near and dear to where I think there's going to be growth. I think Vietnam is one of those outliers that we continue to see this. So exports were up 10.7%, but imports were up 22.7%. This is pretty close to what the expectations were. But again, the imports are helping to kind of support some of this flow through. Now, when we look at December overall, there was easier comps on an import level. But the same can be said when we look at the exports. There was a pretty hard comp, and they still outdid it. So again, these are things that we're seeing a lot of investment, because if you're not making it in China, you're seeing a lot of supply chain shifting into Vietnam, and that's where we're seeing on a GDP quarterly year over year up 4.5%. These are things that are going to continue, but it's very bifurcated. It's not something that's going to be all of Southeast Asia. A lot of this is going to be leveled against within Vietnam, which again is an exciting thing to see, or at least a place to watch. As people do have to deploy capital, and this is an interesting place to deploy capital, as we've seen South Korea and Japan investing in LNG, LPG, and coal facilities within Vietnam to increase the stability of their grid, the electrical generation, and kind of where things can continue to go and where we can see some growth. Now that leads us into the trade agreement, and we've used this chart before, but we just want to rehash some key parts to it, because the RCEP was signed, which was the Regional Comprehensive Economic Partnership, and this is we saw Southeast Asia sign on. And there was a view, it's like, oh, China is becoming friends with all these countries. And it's like, well, I think the market isn't appreciating how important this was more for Southeast Asia than anyone else. And the reason why is because this opens up a framework that the U.S. can come in and India can come in and build to create a broader agreement that doesn't have to include China. Because now you can say, look, this is what we agreed to. It has, a standardization on tariffs. It has a standardization on locally sourced, what percentage of locally sourced of this product is required. This will help streamline and provide a unity for the Southeast Asian nations to kind of unify and show, look, we're an option outside of China, and we have a great framework that Japan liked, South Korea liked, Australia liked, and they signed on to. So when you think about, China and Australia, they signed it together, so they're becoming, they're going to get past their issues. Well, they didn't get past their issues. They're only getting worse. And the same day they signed this RCEP treaty, Australia and Japan signed a mutual defense treaty, which means that the U.S. had to approve it, because the U.S. is essentially the Japanese military, even though they have their own, smaller standing military. But again, these are things that, as we look at ways of positioning, as we look at a Biden presidency, as we look at shifts in trade, this, I think the RCEP, while it's obviously not bad for China, it is very good for Southeast Asia and provides a framework that Canada, Mexico, Chile, Peru can get in on, NAFTA countries can get in on. Then you look at India, and this is showing kind of the countries that are missed and the ones that are in both. The CPTPP, which is always fun to say, but the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. So there's a way to kind of lump all this in and open up these countries to not only the U.S. but also other parts of the UK, Europe in general, because the framework can be used to leverage that and to create some unity. And why is that so important? Because the Southeast Asian 10, you can see that they're starting to become a bigger part of the economy. You know, they've remained fairly stable, but there's growth there. And if you want to start to take some of this Chinese GDP growth and purchasing power and give it to these Asian 10, well, what is a better way to do it than building off of the RCEP agreement into some of these other areas to reduce tariffs, to increase the openness, and to move supply chains out of China into these other areas. And you can see that, you know, this area is about 35% of global GDP. So it's not something to ignore. But if you want to try to address the inequality with China, well, let's find some investment. Let's find some ways. And Vietnam is one. Obviously, India is another. But Vietnam is the one that we've been the most excited about. And those that have talked to us previously, as we've talked in other shows, Vietnam is the one that we think is going to continue to outperform. But this provides, you know, opportunity in Malaysia, Singapore, and Indonesia. You know, Cambodia, Laos for other reasons, but you know they're not as stable as some of the others. And then obviously Myanmar got their got a sub from India, so India is also trying to get involved. So again, there are ways to mitigate some of the issues that we've seen with China by allowing an RCEP agreement to be tailored to as a framework to India, to the US, and to other nations to help cordon off China. So yes, the RCEP is good for China. It opens them up to other markets that they can try to take advantage of. But again, it also opens up the Asian nations to the Chinese consumer, but the framework that can be used and leveraged in other ways. So that's just a recap into the end of the year. You know, this will come out tomorrow on Thursday, so you'll get something to watch ahead of your New Year's. So again, we just want to reiterate, you know, thank you from the PVN family. You know, we really appreciate your support. You know, it's been a long year. Hopefully, we've provided you with some guidance, or at least some semblance of sanity and with data to back it up. And we hope you had a great holiday season. Happy New Year, and we're excited to welcome in 2021. So thanks again. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.